Welcome, boys and girls, to what so far, if you are an equity trader or TradFi, as the kids like to call us, pretty boring, but pretty interesting in the actual overall space when it comes to crypto. So it's good if you're a crypto bro. Make sure you're paying attention there. So I'm just loading this up now. Make sure you are asking your questions because again, this is your guys' time. You get to sit down with a nerd like me who's spent many years and gray hairs looking at charts and ask me what you think of things. But until then, we're going to get started here with just taking a look a little bit around the market, what happened since the last time I've been chatting with you guys, what's potentially up going forward. That's MindMed right there. We'll start with the SPY. So first of all, inside day today, right? There's a lot of traders I know that won't trade inside days at all. They're just not interested in trading inside day, right? Just basically mean all of today's action is inside of yesterday's action. However, it gets a little bit more interesting if you take a look at the futures. We could just do the ES or the SP 500. And with the ES, I think the reason this is more interesting, if we go into like a 2-minute chart, is we gap down. So this is where we gap down last night, Sunday night. So showing that, at least to begin with, people were a little bit kind of skittish, a little bit worried about the day. And then ever since then, we have been slowly meandering higher and higher and higher. And as soon as we opened up, really choppy morning, but slowly drifting higher here. Nothing really crazy going on. Drifting a little bit higher. So looking at the futures, I think is way more interesting than looking at the ETF, at least this time, just because it shows us that, you know, you're inside on the SPY, but on the ES, it's much more of a nice green candle here because this is where we opened up on Sunday night. We sold off a bit, and then we've just been pushing higher ever since, going green on the day after being down, I think, like 0.5% at the worst. So the fact that we're flat on most of these is very interesting to me. Q's leading. IWM is kind of really what I wanted to point out on. IWM, if I go to Russell, and we just use the cash. The same kind of thing, right? Big gap down, and then this one even more so has been bought up all morning and all afternoon. So we're getting the Russell 2000 participating. That is interesting to me because it represents, right, KRE, which is your regional banks, XBI, which is your biotechs. Both of these things are moving pretty well. So we have biotechs moving, we have regional banks moving. Both those things are interesting because they're interest rate sensitive. So if you want to take a bet that they're lowering rates, you can just do so on Polymarket now or whatever, but obviously not big enough for large institutions to make a trade. If you see both biotechs and regional banks moving higher, breaking out, looking interesting, well, that to me tells you that there is more of an interest inside of the interest rate story. Because so the reason biotechs are interest rate sensitive is because, so MindMed, for example, I am a MindMed holder, just FYI, an uncomfortable amount from around this $5 area, irresponsible amount, we could say. Let's just look at their business model. They're sitting right now on $250 million worth of cash. They're trying to create psychedelics that can, you know, help people with depression and anxiety and all these kind of things. But the moral of the story is it's not legal for them to sell their thing because they're going through FDA trials. So that the interest on things like debt becomes very important to companies like this, that they can't make money anyway. They're not allowed. They're not legally allowed to make money. So the lower interest rates, the better it is for small companies like this. So think tech startups, think biotechs, and then again, also regional banks for the same reason, where, you know, the lower interest rates, the more they can lend out, you know, loans for small businesses and homes and whatever, and then they can make that interest rate spread. Higher interest rate is bad for these things. Lower interest rates are, generally speaking, good for these things. So that's what we need to keep in mind here, that if we are seeing, again, XBI and KRE which make up a large percentage of the IWM. So if we're seeing the IWM move, that is just telling us that the market is trying to place a bet that there is going to be more interest rate cuts than they initially thought, or they're going to be more aggressive than they initially thought, which I'm all for. I love a world in which IWM is moving and participating, and we have some small cap access, right? Because right now we seem to be kind of living in two worlds. One is microcaps like quantum computers, drone names, really, really junky names are moving quite a bit. And then we have mega, ultra, giant, large cap companies. And these two things combined are just part of the equation. The ultra, ultra small, the ultra, ultra huge, they're the ones moving. But you have this whole swath of stocks in the middle that aren't doing anything right now. And it's just a better trading world for most people if you have everything moving. So that's why I kind of like that as well. But I see some ones starting to come in. Again, I will go through every one as long as you guys keep asking questions. I will keep being here to answer. They can be stocks, they can be crypto, it can be FX, you can do whatever you want. One of the benefits of technical analysis is it's pretty fractal, right? Also, I didn't introduce myself, but I'm Michael Nauss, and I am from statsedgetrading.com. Make sure you're going to the, just www.statsedgetrading.com. I'll just fill it out here. You can sign up for a free email list there. statsedgetrading.com. Free email list right there, and you can get ideas. I'm a quant, so everything I do is pretty much quantitatively driven. Again, make sure you're checking that out. So first of all, GameStop. GameStop is probably the worst way to own Bitcoin, and that's the kind of take I have against it. Now, if you've been following me for any length of time, you know I've been doing some amount of trolling on different people when it comes to these meme stock things for the whole time, essentially just because they're a cult. Um, they're in a cult right here. When it comes to AMC, it comes to GME, all these ones. So I troll them a bit. But if they look good, I'll buy them. And if they look bad, I'll short them. So I'll definitely take a trade anyway. GME has been trying to put itself on the whole we're going to own Bitcoin standpoint, like everything else in the world. It's just a company that loses the most money that I've seen that's doing this, right? So I would rather take a company that barely exists or barely loses money and is in the Bitcoin game if I want to just trade Bitcoin. MSTR is a great example, right? MSTR, nobody knows what they do for a business. Nobody has any idea, and nobody really cares. This is a more pure play Bitcoin play. Oh, I see you there, Paper Gains. How's it going? I will be back to those Monday night shows soon once the kids' schedules move around. I know you're a new dad too, so you'll get there. The kids' schedule will dictate everything. Yeah, so when I look at GME, I say, okay, what does this company have going for it? It's a dying retailer that sells things that nobody wants anymore. It's not really that heavily shorted at all, and they're just trying to get into the Bitcoin game. If I want Bitcoin exposure, there's a million ways to get Bitcoin exposure that are much better, in my opinion, than this. So if you're trading this, you're trading it based off on some other reason. And from a technical point of view, big gap down. So bad news, whatever came out on this earnings report, don't know, don't care. News is bad. So bad earnings report and then sideways consolidation. I have to bet that if we're going to get a continuation out of this little box I drew, it's going to be in the direction of the trend. Now, some people like to kind of fade up into these gaps. So maybe if we could get above this prior high around 24.25, could hold above there, we could get this interesting push higher into this prior range. So I don't see a reason to take a bet on something like this, considering you've got all kinds of cool stuff that's hitting new all-time highs and moving around a bunch. But if you want to play it, I think you just play it outside this box. If it gets outside this box, great. If not, like what do they do? Like, what do they do that's interesting at all? That's what I don't get. I think it's all leftovers from when they were heavily shorted, which they're not anymore. And you got the crazy people still saying, right, everyone's still short GameStop. Really, no one cares about GameStop anymore. BBAI, nice looking pullback on a really strong trend. Anchored VWAP from where it broke out of is acting as support right now. This is a nice looking little bull flag. Long term chart, it looks like it wants to try to take a shot at highs, and that's 13, 14 bucks a share. That's pretty interesting. So if it gets back there, that's, a long way to go. That's double, over a double from here, almost a triple. And then nice push up and then pull back, holding this prior gap zone. So this is a nice looking pullback. For a swing trade, I actually really like this one just because it's pulled back and there's a couple areas of support here. One is this gap, the other is this anchored VWAP. So you could take a shot on it, maybe just use like 550 or something in and out. For a longer term play, I would watch this zone right in through here. So nice little trend line that we keep bouncing off of just to see if we can end up breaking through or back through that trend line. If we can get back to that trend line, that's an interesting little push that we could potentially have there. APLD, I was watching this one earlier today. So you can see I already have this drawn out. One of my favorite swing trading patterns that you can do. Not a huge pattern guy. Again, I'm a quant, so everything I do is back tested, and I can tell you the performance of what I do going back 25 years, right? So I can say this is the system as we went 25 years back. This is what I've been looking for. This is the output of, right, there's win rate, here's risk reward, blah, blah. Then I like that kind of stuff over patterns. However, if you took all that cool stuff, my machine learning models, my back tested statistics, and said, okay, you're now just a pattern trader, that's all you can do, it'd be this pattern. And let's just describe it quickly. So, just two scenarios, two simple things to watch at this pattern. One is an area of support, right? One of my favorite technical analysis saying is draw your trend lines with a crayon, not a pencil. So you could look at the low of this candle right here, which was 941, and the low of this candle right here, which is 902. So you're basically saying from $9 to 950. There's an area of support here. We've bumped into this a few times and gotten some buyers. So this area zone, this area here, you could classify as support. And then just the next part is just a simple downtrend line. So you're taking this prior high right here, then we've bounced against it right here, and now we're in this tightening zone. It's getting closer and closer to the potential apex of this triangle. So the reason I like these more than anything is that everyone's taught that this is a descending triangle and it should go lower, and that usually means probably going to go higher. So what I would do is I'd wait for a daily candle to close above this downtrend line. Say it closes right there, and then you're putting your stop loss below that low, and then even if you're just targeting maybe this prior high or just even halfway through it, that's like a 2.5 to 1 risk reward. And that's what I look for as a trader. I know that my accuracy is going to be okay, 50 to 60%. That's it. Anyone who tells you that they're accurate all the time is just lying to you. But it doesn't matter. You could be right 30% of the time and make a killing in this game if you're looking at risk rewards. That's why I like this kind of setup, is because the risk is so very, very tight. And then your reward, if it goes back to this prior high, that's a 5-hour trade, 5 times your risk, right? So that's an interesting zone if we can get through those. So yeah, I like the look of this one. It has digital in the name, that's good. Longer term look, I like that it broke out of this resistance right here around 10 bucks, and then it's kind of come back in and hang back through it. So if that can hold, then that's great. But this pattern gets kind of completely null and void if we end up just breaking down the support zone, because you want to see both the support where people are buying it, and then you want to see the resistance, the downtrend break. So you're getting a change in trend. You've got some people buying under below you. that's a really good pattern. RXT, rack space technology, or I guess we'll do a whole thing on like patterns today. It's because people are showing them. So this is a pretty junky company, right? This was $27 down to $1. So it's not something that I want to like get married to because it's a pretty bad company. However, this is looking like a little bit of cup and handle or inverse head and shoulders, whatever you want to call it. Doesn't really matter too much. But the idea is you have a low and then a lower low and then a potential higher low. And that's just how trends change, right? That's so just to demystify all these things the best I can because there's no real crazy magic in any of them. So here's my drawing tool. Oh, it's being hidden by this thing. There we go. So if this is a trend, and we all kind of agree, this is how you mark a trend. Higher highs and higher lows, that's an uptrend. And lower highs and lower lows is a downtrend. So all a head and shoulders is something that is in a downtrend, and then it bounces, and then it fails to make that lower low, right? So you would expect this thing to sell and make a lower low. But when it fails to do that and then starts to push higher, then now you have a higher low. And then if we break this high, well, now you have a higher high. So that could be the resumption of an uptrend. That's the idea behind it. And I think it's fine. It's a fine idea. Again, I'm not a big pattern guy just because there's too much subjectivity to patterns versus just quantitative stuff. But you can kind of see that one. And the thing I like about patterns is you know when you're wrong, right? So for this one, this head and shoulders fails if the stock gets under like 115. So you're buying it at 151, your stop's 115, and then you just got to say, okay, is there a decent probability? Let's start from here and let's put our stop at 115. Let's say if it gets to 225, that's a 2-to-1 risk reward. As soon as you get into that 2-to-1 risk reward zone, that area, then I think you end up starting to get a good trade regardless. Your win rate doesn't have to be that high if you're getting a 2-to-1 risk reward in order to make money. If you have a 50% win rate and a 2-to-1 risk reward, and you are just patient and confident and continue to do the right things, in the long run, you'll make a lot of money in this game. So, APLD, we did RXT, so now we're on CTM. Interesting. This stock has done nothing for how long? Is this the beginning of the price data? Yeah, so it's gone from a high of $40,000 a share to 71 cents. So again, I know I have to give this rant a couple times every time I'm on here, but it's never been $40,000 a share. Right? What happens with companies like these, they have to keep doing reverse splits because they can't do anything to stay listed on the exchange. So just be careful there. We have outperformed earnings a little bit here, but we have zero, so it isn't losing money anymore. So that's good. Earnings estimate is zero again, so not losing money is better than a lot of companies out there. Ideally, in this environment and in these interest rates, you want to be making money, but not having any money, that's interesting. And the pattern looks okay. So they had a little bit of an earnings surprise where people are like, hey man, we're not hemorrhaging money anymore. So that's, first of all, a good thing. And you have this nice consolidation pattern. So again, the beauty of this, as we're just going through our pattern episode here, if we break out of this at 140, great. And then if we, so your 140 is your break, and then like under a buck is your stop. So you're risking 40%. That's pretty big. But it's all about risk reward, right? If we got back to that high, that's a 5 risk reward. So just know if you're wrong, you're sizing your position, you're pricing it accordingly, that this thing could fail here, get to a buck, get to 150 or 50 cents, right? Things could go really, really bad. So you have your out, and your out is tight, and then you're letting it go, and then again, a 5-to-1 risk reward. If there's a 50% probability, then you kind of want to take that, right? UVXY. Okay, so first of all, a little bit of a rant here. The VIX is, you shouldn't ever do technical analysis on the VIX. Don't do technical analysis on the VIX. Stop that. That's bad. The reason for it is because it's not really an instrument that is moving based off supply and demand of the thing. It's a measurement tool, right? So it's like people doing like technical analysis on like GDP. What are you doing? You're crazy. So the UVXY is essentially, or the VIX, right? The person asked for UVXY, which is a leverage version of what we're looking at here, is how many people are buying puts on the S&P 500. That's it. The more people that buy puts in the S&P 500, the higher this goes. The less people that buy puts in the S&P 500, the lower this goes. And that's all she wrote. That's all there is to it. There's nothing else. So what we want to do is we want to make sure that we are focused here and that we are understanding that I shouldn't do my analysis on this because this is just a byproduct of what's happening. Another way to do it is like, would you do technical analysis on an options contract? Right? You probably wouldn't. Probably wouldn't make sense to do technical analysis on an option contract. It would probably make more sense to do technical analysis on whatever that options contract is written on. Right? So that's the idea. And when it comes to what we're seeing here in the VIX, there's another conversation to be had here. The reason the VIX gapped up so much and the reason the VIX is still up today is because of what is happening tomorrow. So there's a couple things that are happening tomorrow. One is we have the core inflation rate. We have CPI. We have NY state manufacturing. I don't know. I don't think anyone cares for that, but we have inflation tomorrow. We have the inflation number tomorrow. It's a very important number. Also, we have bank earnings. So we have JP Morgan. I think we have Bank of America or Wells Fargo. We got a handful of bank earnings that kick off earnings season. The reason that bank earnings are so important is because you need banks for a healthy economy. You need banks for a economy in which is strong. If the banks are doing well, they're going to lend more money, and lending more money is going to be able to finance more things, and by financing more things, right, so on and so forth, right? Banks need banks for a good economy. So CPI number and bank earnings. So if I'm a large hedge fund, a multi-billion-dollar hedge fund, well, what are the things that I'm doing today? Well, I'm not trading a bunch. I'm sitting down in meetings with people and saying, what happens if JP Morgan misses? What happens if CPI comes in bigger or smaller than expected? What happens to all these things? That's the kind of speculation I'm doing. If I'm worried about either the bank earnings or the CPI number, I'm buying puts on the S&P 500. So that's why you have this VIX pop. It's kind of like if you've ever watched volatility into an earnings report, the options get incredibly expensive right before the earnings report, and then the volatility gets sucked right back out. They call it vol crush. That's why a lot of people out there will sell options before an earnings report, because most times, even if there is a move in the stock, it shrinks that down, right? It condenses those moves. And that's what you're seeing right now. So the VIX is high today, got bid up today, because there's people who are buying put protection on this massive news that's happening beforehand. Odds are this VIX kind of bleeds back down and resets back to where it was on Friday, because after the event, that volatility just gets sucked out like a vacuum of what's happening here. So I hope that makes sense. That's why the VIX is high, and also why you should never do technical analysis on the VIX. Yeah, people are buying. Protection into tomorrow. SOUN. SoundHound AI. This is one of the junkier AI type plays, but it's actually holding on okay. It's actually doing a little better than it was there initially. I don't see too much here. You could kind of just draw this here out. as a really wide range and just say we have to move in this range. We have to break the higher the low. A nice looking little pullback, but then if you zoom out even more, you're kind of in the high of this range. So it's just a very choppy range bound stock. It looks like it has earnings coming up fairly soon. Thursday, October 7th. Maybe that will kick us up. But until then, we're range bound. And with so many things not range bound, I want to make sure that I'm doing that stuff. So SBET. This is the Ethereum trust one, I think. They're one of those trust fund, trust companies. They're one of them. Come up to close the gap today. So gap down, got into some Ethereum shenanigans, ground back up into the gap, and then it touched the low end of that gap and is reversing a little bit. Right? I look at it, if you're in this thing from this move, you're up 200% in a couple days, and you're not ringing the register, you're not taking money on it, what are you doing? Like, what do you expect? What do you want to have happen? What else? Like, what else is there? So yeah, I just look at it as, yeah, could this thing go back to 100? It could, but that was really kind of crazy euphoric stuff. I really don't think so. I think if you got a good move out of it, you probably got that good move, and it might be time to ring the register, put some bucks in your pocket, and move on. That's just my opinion. I wouldn't be buying it after it's just moved 200% in a couple days. And I wouldn't be shorting it here either because it's absolutely insane. So, NVDA, slow grind to and through all-time highs. There are times that technical analysis is great, and that's identifying trend and support resistance, prior turning points, sentiment, that type of thing. When a stock's just grinding all-time highs like this, there's nothing TA can do for you. It's just one of those in which you have to just kind of hang out, right? You just gotta wait. If you're in Nvidia, put a moving average, right? Set a trend line, something like this, right? For a trailing stop, do something like that. Just have a reason to hold on and let price tell you when to get out. That's great. The other way around is just to say, if you are looking to buy here, I don't think that's necessarily the move because we've just rocketed pretty high through all-time highs. And I wouldn't short here either because it's a nice solid uptrend. So there's just charts like this, and more of these will start to come up as more and more things kind of crack through all-time highs where the answer is unsatisfying because it's an unsatisfying, there's nothing to do in this stock. But in this case, there is really nothing to do in this stock. Right? We are just grinding higher through all-time highs. If I owned a bunch of Nvidia, which I don't right now, I would just be holding on, right? Just with all of my might, I would just be holding on. But I don't, so there's just nothing for me to do here. I can't buy it, can't sell it. Just have to hold in. CELH, the weekly chart, 1 week. Nice solid uptrend. One thing I like about it, so this is the anchored view app from all-time high. So this is where the average market participant from all-time high exists. And when you can retake that, and you can retake that pretty substantially, then all of a sudden you feel great. It's the best way to change sentiment is if the average person from all-time highs, which means you basically started buying at the worst possible time, when their average price starts to turn positive, that's a great sentiment shift for the company. Right now, if we take a look here, we also have a nice little uptrend that started. So I would look at that and say, okay, well, we're above the anchored view out from all-time high. We started a nice little uptrend. looks good to me, right? Who knows how long this trend will persist? Are we going to get all the way back to 100? Probably not. Every time you see a kind of euphoric kind of blow off, which I would classify this as, this company went from $1 to $100 pretty quickly and then just did this kind of blow off top. It takes a while, if ever, to get there. I'm not saying this is a bad Peloton, but it's a good example. You had this euphoric high, and then when that cracked, I mean, you can take trades here and there. You can see I've got a kind of a little cup and handle drawn out here in Peloton. If this cup and handle breaks, I'll be interested in it. See something like that. But I'm not going to bet. Even if it does, I'm not going to bet that it goes back to $200 a share. It's like, hey, if it can break out here at like 750, if I could take it to 14, that's a great trade. If I could take it to 20, that's an amazing trade. I just don't need to really, really swing for the fences here and kind of go super nuts on this. Okay. AMSC. So full disclosure, I bought some of this today. Again, I'll always tell you guys if I remember and I'm in a position. This, to me, looks like a very nice chart. It's not an all-time high, but it's a multi-year high. And then it breaks out, and then it puts in this really tight base. And again, I told you I'm a quant, so I have a quantitative strategy for this particular setup, and it's accurate 45% of the time. So like I've mentioned here before, I mention all the time when I'm kind of out in the universe that, there's the best strategies out there that I have found are sub 50-50. I have a lot of strategies that are right 60% of the time, but they're more, revision to the mean or pullback scalps. This particular strategy, I think, is a great one, even though it's only right half the time. So basically, I mean, there's a 65% chance that this breakout will likely fail. There's a 45% chance the breakout succeeds. And the reason I love the strategy so much is because if you just put your stop at the low of today, which is like two equal lows here, and said, hey, if we get back to 38.50, I'm out. Well, you're risking $1 or $2. And then if this thing breaks out, getting to $5 is certainly no big deal. And that's, again, that 2-to-1 risk reward, right? So, what am I seeing here? BWXT. I haven't heard of this one before, so this makes me think that this might be one of those BWX Technologies. I don't know. Sorry, I just gotta pause something there. Wow. No, I thought this might be a junky name because I hadn't heard of it before, but yeah, all-time highs. Aerospace and defense, I see right there. I love that sector right now. Just because if we take a look at the ITA, which is our aerospace and defense sector, hitting new all-time highs today. This purple line is where this started to make all-time highs. That is a nice grind higher. That's a nice push up. BWXT. I like that this has pulled back into these prior highs right here. So you had a breakout of all-time highs. You've had a successful, so far, retest of all-time highs. So now all you're looking for is a potential grind higher. So this nice little push up here looks great on this one. So I think it's your analysis here becomes pretty simple. Do we hold 134, 135 on BWXT? If we do, then great. We could potentially push higher. If we don't, then it's time to go. Right? So that means you're risk or the area you're watching is so microscopically tiny that, it becomes very, very easy to just look at that and say, okay, um, this is my right or right out line, right? I'm right out of this one if it's right here as well. So, let me see. I missed one. LFWD. Scrolled up there. It's probably going to zero. How crazy did this one go? Yeah, it's just a $10,000 stock that's now worth 73 cents. Likely a zero. They are hemorrhaging money, I would bet. Yeah, hand over fist, just throwing money out the door in a high interest rate environment. This is one of those, unless there's an FDA approval around the door that you think is coming very, very soon, you just ignore this entirely and move on with your life. X, or CLOV first, and then Ripple. Clover Health Investments. It's a nice looking potential cup and handle here. If we just draw this in, nice looking, right, cup here, and then maybe handle up here. So if this 250 holds and we start to move to the high end of that, that's interesting to me. I know this is one of those de-SPACed kind of nightmares that got completely destroyed, so just be careful with that. But yeah, if that cup and handle holds, there's some hope there. And then Ripple. Ripple, this chart is amazing. I own some of this as well. And pop that there, just remind everyone where I'm from. But yeah, this is, I talked about this with the, APLD setup that I really like the look of. That this is one of my favorite setups. You have a clean and obvious area of support. This 180, 190 on Ripple, there's just buyers coming in over and over and over again in this area. And then you have this downtrend. So the idea is if this downtrend reverses, which it has, I bought a little bit in through here. I bought a little bit of XLM as well. Now, if you take a Fibonacci for a target here, that's like 450. That'd be pretty amazing. I don't know if we'll end up going there, but that's a pretty sizable move that could potentially take us to a pretty gnarly price, projection on that. Obviously, talking my book because I own some, but I think it's certainly possible. REPL, I've seen REPL. Yeah, this is an ugly chart. There's just really nothing to see too much there. We're inside this range from 17 to 6, and that's inside this range from 55 to 5. It's just a nice, there's just really no pattern or anything to be seen from here. This is another health technology, a biotech company. So just make sure you've got your eyes on that. You're looking for some type of FDA something to get them out of this because they're not selling anything. They're losing money. So technically, I don't really see a lot here. There's some trend lines maybe you could draw and maybe take a shot if those broke. Right? Just something like that. Maybe if that trend line broke, you could take a shot on it. But yeah, just range bound, choppy action. CSR, Corsair? Is that Corsair? Yeah, Corsair Gaming. This is one of those IPO and then rip and then kind of tank back down. So I would watch this IPO price right here and just take a, put in there. Yeah, the IPO price is 25 bucks. The AVU from the IPO is 25 bucks. That is a while. There's a while to get there. And until then, I think you're just kind of hard stuck inside this range right here. So you need, a break of 12, maybe take a shot to see if it can get to that IPO AVWAP. But until then, you're inside of a little tiny range here that's inside of a larger range. And then I always look at it and I say, companies, we are hitting new all-time highs again on the market. We're cracking through new all-time highs over and over and over again. And we can't get going with something like this. I wonder why. Yes, it's up off nicely. It's kind of doubled from its lows, but why can't this participate in the market that's just hitting new all-time high after new all-time high? That's something that I think you just got to look at and say, is that something that you believe is going to change? I don't know. OMDA Health. There's not a lot of price action to do with an IPO like this. It's done what 80% of IPOs do, which is dramatically and quickly undercut their IPO price and then start to go from there. So this one seems pretty simple to me. You've got an area where buyers came in a couple days ago at 1650, and you've got an area where sellers came in a couple days ago at about 1950. If we can break either of those, that's interesting. If we don't break any of those at all, then just kind of move on, right? It's a pretty simple trade to have there, and I like those. Right? The simpler the trade is, a little bit, the better it is. NONGA. This is definitely a meme coin, right? The Ninja Squad token. Sure, why not? Oh, it's just down 80% from highs. That's not too bad. This is actually looking like, to be honest, all of the meme coins out there. Let me go down to my section here. Right, this made a low, potentially put in a higher low, and is starting to coil up. But like, let's look at all of them. Low, higher low, and then there goes with, that's Pengu. Low, potential higher low, looks like it's coiling up. There's Peanut the Squirrel. But all of these are kind of moving the same, right? There's Dog with Hat. And the Farcoin, of course, the king. Right? Low, and then higher low, and then looks like it's curling up. To be honest, Farcoin is the strongest of the group, which is, again, just all this is just hilarious. Right? Low, potential higher low, looks like it's curling up. A lot of them look the same, and a lot of them will move together, and a lot of them will move together with the price of Solana. So if we can really get going, pumping here in Solana, then we have something. But we have to do that, right? And we just haven't yet. We haven't been able to get going at all in Solana. So got to keep an eye on that, see if that starts moving. So yeah, it looks like a lot of those other memes, and you can go through. What else do I have? Doge. Do we put Doge in a meme coin? Right, low, higher low, coiling higher. Shibu. Low. This one actually made a lower low, so Shibu is relatively weak to the rest of them. And then so I think what you want to see is this Solana moving higher, but then more importantly, Solana BTC ratio. You want to see this start to push up, just showing that there's some more interest in this kind of meme coin craziness. Because if so, right, if you see the rest of them going, then this Nonja token will move, and if not, it can't. So NITO. Oof. Probably another 0. Yeah, so had to do a reverse split already because they couldn't keep their share price over $1 by just being a good company. And now it's well under $1 again, so another reverse split is probably coming, which generally speaking they call reverse splits the kiss of death, because it's just, you've just showed your hand to the stock exchange and saying, I cannot keep my share price even over $1 by just being a good company. I just can't. So I need to do financial shenanigans in order to boost my price up. So that to me is worrisome. I would take a look at their financial position, because they haven't gotten this way without burning money, and they're a household personal care company. So it's not like an FDA approval can save them, I don't think. is clean tech suitable energy solution for ag tech. So that's interesting. So that's it's a so I would just go look at it like, okay, here's their where's their cash. Sometimes you can just go in, take a quick look. How much money do they have? How much money do they need? So debt, free cash flow. So they're doing pretty good from the debt standpoint. They will likely need to reverse split again to save their company. So that to me makes it a no-go. So this is to more of a, there's no technical analysis to be done here because nobody's trading this stock either. Right? If you take a look at the 2-minute chart, there's just no one's trading it. So no one really cares. So this is something that more of a story or a fundamental thing I think would make more sense to look at than anything. But they will most likely need to do that reverse split soon. And remember, that is usually speaking the kiss of death, right? The last one came up here at what would be 250 and then completely fell apart. AIRI. Yeah, this is another one that anytime I can look at this chart and tell you right now the volume of this company is tiny. I don't need to get too crazy with it. 240,000 shares. So like what? So like $600,000 changed hands in the stock. It's a really small company. And when you have these things, then technical analysis does nothing because technical analysis is essentially just a reflection of what are the market participants doing? What are the buyers and the sellers doing? At what areas are buyers overwhelming sellers? And what is the overall trend and things like that? If you have no buyers and sellers, then you really can't do any technical analysis. So I'm sorry, but at least it doesn't have to reverse split soon. I don't know if it has before. Oh, definitely has. This company used to be $7,000 and now it's $3. So Air Industries Group. So this seems like another one that, again, keep an eye on, but a lot of headwinds. Anytime I look at this, a company like this that used to be $7,000 and is now $3, I just know there's so many bag holders on the way down, on the way back up, that there'll be people selling into the company aggressively if it goes up at all. CGBS. And again, so this is a D-SPAC at 10, immediately fell to 27 cents, and then immediately fell to 6 cents, and not really being traded at all. Yeah, 4 million shares of a 6 cents company. No money's changing hands on this. So nothing I can do for you here. Company looks awful, sitting at lows. Not something I would trade with someone else's money. D-Dog. Now this is a company that does things and makes money, and it's probably a real company, unlike some of those other guys. Datadog did an interesting move here because it had a nice gap up on some good fundamental driving news. And then from there, it just started to grind lower. It filled the gap right here, and now it's bouncing. And this is a nice, interesting candle pattern where you have a tiny little indecision candle where the market can't make up its mind. It gaps down and then it rips today. So if this candle holds, it could be a nice little reversal spot off of this low. On the long-term chart, this thing is very, very range-bound. There's no overall predominant trend in this, but in the short run, it's doubled. It's gone from 80 to 160, and then now it's popped down. So if it can get back up to highs, it's a 24% move. And the beauty of it is this kind of engulfing pattern for the people who like to trade these, you know immediately right where you're wrong. If we start trading into the 130s again, you're probably time to go. So I like the look of this one. It's a nice looking chart on a strong stock that's in a pretty decent trend. ABVE. I actually have. Am I triggered in this? I am. So I own some of this one, just FYI. These are short-term systems, right? It's quick in and out kind of a system. But again, I'm a quant. This doesn't look like a good overall kind of trade from the long run. Just $10 and completely reversed. It's slowly grinding its way back up. So maybe this is going to change now and it's going to start to try to test the highs here. But what the algo was looking for on this is a huge move that happened last week, and then a nice pullback to these prior highs happened this week. So that kind of trade is a very interesting one. So that's one that we got to keep an eye on. It's a nice move there as well. So yeah, that's the trade that I've taken on this particular name right here. Just a big pop up and then a little bit of a sell back. And I like the look of that one. But with these ones, again, it's about 1 week hold. I want to see whatever this news was that woke up the company, start to really get buying participations in. Like if we're not back at like $4 or so in the next couple days, then I'm not interested in the name at all anymore. But yes, that is, again, I will tell you when I'm in something. I will tell you why I'm in it. In this case, it's just because it's a purely systematic trade. Baba is interesting, right? They had some sort of AI launch today. Got everybody super excited a little bit. This is an interesting area for Baba because where buyers came in down here last time. But just China as a whole is still consolidating really, really tight. Do a line chart here. You can see how tight this consolidation here is getting on FXI. So Baba, I would just look for a trend line break. And then there's your low. If Baba really is going to turn around and start to get up in the 200-300s again, then I don't think you need to be early. I think you can wait a little bit to make sure that this is something that makes sense. But it's a nice looking chart. It's a nice looking consolidation here. EL. Estee Lauder. Overall, really epic downtrend. And then just recently, a nice little 86% off the lows. I don't think this kind of up move fixes this kind of down move. If anything, I'd be looking for a place to potentially short, because every time we've had a rally like this before, you can look at this one. That was a nice 60% rally off the lows. And then we had this one. That was another 50% rally off the lows. So far, each of these have failed, and we've been making lower and lower and lower lows. I have to just bet on the trend until something tells me that the trend has changed. And in this case, there's nothing to tell me that the trend has changed. CSPC, I haven't heard of this one before. Awful, probably going to zero at lows. DATS. At least this one stopped going down a while ago. Another one of those companies that you really need to look into the financials and see what is going to change to stop them from just lighting money on fire. I mean, it's one of those companies that looks like it's lighting money on fire as it's just hitting new lows after new lows after new lows. I like, first, to start going up, you must stop going down. And at least this one has stopped going down for a little bit. Does not mean it has to go up. It doesn't mean that this company will ever go up. It just means it, for now, in this very moment, has stopped going down. And that is at least somewhat interesting to me that I can kind of take a look at. And then if it starts to build a higher base, maybe gets above 350 or 4, that's kind of interesting to me. But another kind of junky name. PHAT. Looks like I tried to get a fill on this one. This is more of a candle that makes me think that there may have been a fundamental shift in the company, because it did this pretty massive and impressive spike right here, but it's not that. It's the fact that it has been holding on here ever since. So that's good, right? We have this kind of sideways chop, sideways consolidation that's been going on here. And when you see a big pop like that, that's what you want to see next. You don't want to see it give back up. Every time you get a big spike because of news and it just gets sold into, just showing that there is no faith in your company across the markets. No one's like super jacked that, okay, great. Finally, there's some good news and this thing can shoot to the highs. if you want to make sure that you're getting in a stock that the news catalyst matters, is you just wait. And if it doesn't sell back off the way this one has held up pretty nicely, then I think you might be onto something, right? And so it's a decent looking little trade. Like I talked about with the other one, right? This one has gone down from 50 down to a low of 7. But like I talked about with that other one, is you have to stop going down before you can go up. And this one is at a price that it was in 2022. So 3 years of incredibly aggressively going nowhere. So I think you just kind of measure against these lows right here, right? 650. If you can hold those 650 lows, then maybe this thing drifts back up to 20, and then maybe through 20 it starts a nice uptrend. But if we lose these lows at 650, it's probably time to go, because it means not only have we lost this prior support zone that we had, but it also means it gave up a lot of this good candles day. So I hope that helps. All right, one more here. WATT, 0. It's a 0. It's very likely a 0. Yeah, $400 down to 39 cents. Probably hemorrhaging money hand over fist. Yeah, burning money. And one thing to keep in mind is that we are not always in an environment in which a company has to make money. And I think that's probably a good rant to end on. There's times in 2020, 2021, all these periods of time where there was some benefit if you were growing as a company to be burning money. So it's not always necessarily that burning money is a bad thing. Sometimes growing and then burning money is fine. Like Uber did it for ages. If you're not growing and you're burning money, then you're screwed, right? Unless you're, especially if you're in semiconductor. What you need to do is you need to both either be growing or making money. Now, in this environment where interest rates are, if I just go to TNX, so say I'm a big name investor, it's 4.5%. I could take my $100 million and I could huck it into this, and I could make 4.5% on my money with zero risk. Why would I potentially then want to invest in Watt where it's going down every day and it's hemorrhaging money? Like, why would I do that? And it's not to be facetious, it's a serious question. You have to ask yourself, when the market is calm, right? When the interest rates are zero or near zero like they were, well, I don't have anywhere else to put my money. So I'm going to put some of it into safe equities. I'm going to put some of it into aggressive equities. I'm more forgiving of a company that is growing over time. And even though they're not making any money, as soon as we get into an environment in which interest rates are paying a lot, I am less tolerant of a company that is not growing and is burning my money like they're lighting it in a backyard and setting on fire. And the last thing I'll say, just because there's been a lot of these kind of junky downtrend penny stocks on watch, if your stock is a penny stock, it's a penny stock for a reason. It's because it's a bad company, right? Nvidia was never a penny stock. You look at the reverse split price and it kind of looks like it was, but that's just because it had to split a bunch on the way up, right? Instead of reverse splits, it's done regular splits. If your stock is priced at $1, it's because your stock sucks. It is. Now, it doesn't mean it can't go up, but what you need to do is you need to study what is going to be the catalyst. What are they going to release that's going to turn them from a money losing company into a money making company? Or you just wait until the company starts an uptrend and starts going higher. Until then, it's a bad company and it's probably going to have bad results. You can look at all the literature. It's way better to buy stocks that are going up and hitting new all-time highs than it is to buy stocks that are going down and hitting new all-time lows. Unless you really think that they've got a drug on the way or a new technology that's going to come out that's going to change the world, and you're the only one that sees it because the rest of the market doesn't for some reason, then stay away from them. They're really super dangerous. So, as always, guys, I appreciate you guys coming out and asking some questions. And until next time, I will talk to you soon.